Good evening, everyone.
Hello and welcome every one of you sitting there waiting for Chris Brecher, our esteemed colleague, friend, and trading pal. That's right, you heard it here first. Today we have our esteemed Chris Brecher in the proverbial house ready to share with you the advantages of his methods for chart patterning in his upcoming class. Some quick housekeeping to go over. You may see some interactive features like polls and offers popping up during the webinar. Also on the right hand side, you'll see a live Q&A tab where you can ask questions that will go to our moderator team as well as Chris at the end of the presentation. If you'd like to maximize your screen real estate, you can minimize the chat section via the down arrow just above the chat, and you can also maximize the video by hovering over the video and clicking enter full screen. That all being said, and without further ado, let's get in there. Ladies and gentlemen, I present to you Chris Brecher.
Good evening, everyone. This is Chris Brecher, Senior Managing Director of Stocks at Simpler Trading. Tonight, my three favorite chart patterns. I've been using them for 40 years. They work back in the dark ages. They still work now. First things first, that's a bear flag. I had emergency major back surgery, and from the bed, I'm using an iPad, and sure, I shouldn't be trading. On the left is the ES. I just want you to know you could have used the ES. But on the right, I shorted 100 shares of SPY as I'm like, a bear flag is a bear flag. I have to do it. It was so clear. So I made 2.5 points from the hospital bed. And basically, I don't remember it a lot, but that's another story. But yeah, $250. This, 1987. I was on the floor for 8 years. This is one of the spectacular moves. Shorting this move made my year. That's a ledge, a Brecher ledge, and there was a ledge within a ledge right here. So I went and I bought puts on Friday. It was like I remember it today. I was worried about the entire exchange imploding on Monday, so I left the floor and kept my puts and went. It's called upstairs, but basically First Options had an upstairs room where you could go watch the market. There were 6 monitors. And what's pretty wild about that is I sat next to the guy that was one of the largest losers in the world on that day. So he lost 60 million bucks. He was sitting there chanting hymns, sweating like bullets, and I'm sitting there on the other side of it. It's sort of like a pro golfer that's trying for a course record, and his or her partner has the shanks. I mean, it's very uncomfortable, but it made my year. Does this look familiar? I'm going to go back to the other chart. There's the OEX, or it was the mini SPX 1987. This is the YM today. Yeah, isn't that amazing? You don't have to think that this used to work and it doesn't work anymore. The first thing when somebody's in a slump, and we'll go over all that, but they think the computers rule everything, that there's no way that they're able to compete. Well, that just isn't true. When it comes to bear, bull, and Brecher ledges, guess what? Algorithms are looking at those patterns too, except we can jump on when they do, and it becomes a self-fulfilling prophecy. It's very exciting. Who is this for? Are you getting burned in the market or unable to find good setups? You go back to that one I did from the hospital bed. There might be 50 setups during the day, but I want to find the good ones. It's sort of like going to the eye doctor. And you go in there and they put your eyes in some machine and they go, is it A or is it B? Is it C or is it D? And you know whether it's blurry or clear. Just like you saw the prior chart, it was pretty clear. Now, there's all kinds of charts that look like this and diamond formations, but heck, that stood out. And I'm telling you, every day you see them on multiple time frames in multiple commodities, in products. It can be futures, Forex. It can be a tremendous amount of different products. So if you're struggling to determine market direction, definitely start with these. If you see a big bear flag like you saw in 1987 or today, you're not going to sit there and try to buy anything. If you do, it's got to be ultra short term. So tonight, 3 proven chart patterns I've used for 40 years. And believe it or not, it's the same charts. So I will show precise chart patterns that can enhance any trade setup. I'll show how to quickly and easily build hot stock lists. I have a main list, then every day I have a hot stock list. Like today, United Air had like a 30% move in a week. And today they had earnings. It opened way up. And I'm like, we got to put every airline up there and look for bear flags because this is just so overdone. And it worked. So the power of combining basic chart patterns with indicators. So the charts I showed you had no indicators on them. I like having 3 reasons to do a trade or 1 reason to get out. So the thing is all 3 of those charts didn't show indicators, but I'm telling you, indicators really help. So I use some simple ones, but there's all kinds of indicators. And if they get you to the end game, by all means, combine them with these charts. It's a huge advantage. The other thing, like I said, stock watch list focused on opportunity sectors. So definitely, you want to look for what's hot. One of the biggest things about the stocks I'm showing is you want stocks that are volatile. And one thing about volatile stocks, they set up these patterns a lot more often, whether it's stocks or options, gold, crude oil, no matter what. This will help you with more consistency and confidence. The name of the game is consistency. And the more consistent you are, the more confident you get, which can also be a mistake after a while. And sometimes I've had to go back to basics, which means going back to these patterns. Now, I trade with this strategy with my own money. I'm trading all day. In fact, I'm trading all day. I'll jump on chats and on all the different chats if I see something. The actual winning and losing trades will be shown. They're not hypothetical. I really did them, like the one I showed you from the hospital bed. Past performance is no guarantee of future results, and there's risk in trading. So no doubt there's risk in trading. I use stops all the time. The results are real, but I can't promise you'll get the same or similar results. It's not financial advice. It's for educational purposes. To me, this webinar is like a book. So you just go back to it. It gives you a really good foundation of the charts I'm using. Is this your challenge right now, that you're using too many indicators? It doesn't have to be that difficult. I'm not saying that these lines of Gann lines and so on don't work. I'm just saying that it gets confusing unless it's really laid out beautifully. This is a similar chart without all the noise. So just keep that in mind. The other thing, look at this. Yeah, you don't have enough confirmation to get in trades. I found that when you combine chart patterns with those indicators, things like today, like you had Powell, the head of the Fed, suppose he has COVID. Well, the first thing you think is, well, that's not a big deal. But that was enough to get that Dow Jones ledge to fall apart. So even though I thought it was stupid news, the chart was the chart. So a lot of times it keeps you on the right track and not having to watch extraneous factors. See this? The other thing, if you start getting to where you ask Alexa for some trade ideas, you know you're in trouble. I tried, and it takes me to CNBC. The good news is there's always another setup. I just can't stress enough on how I missed the first move and made the second. So just to let you know, a lot of pros I've worked with, they actually tell you to take off the net change. Because when the ES was down 30 today, you're like, well, I missed it. Well, it was down 63. There's always another chance. The more volatile the chart, the more opportunities you're going to have. If today you were trading a $10 stock, you're just not going to be able to make back what you lost. I've seen that mistake when AMD was a very cheap stock. Everybody would get bearish and short or bullish and trade AMD and make their 10 cents. And when they were wrong, they'd lose 20. You got to have a volatile stock. Today, I'm going to talk about what you'll learn. Find opportunities in the market every day. Every day there's ups and downs. And just keep in mind, I know Kramer on CNBC used to say there's always a bull market somewhere. That always drove me nuts. There's always a bear market somewhere too. So I try to find both sides of the market, which came in real handy last year when the Fed started to tighten. I will show how I gain confidence and clarity in my trades, but usually the clearer the pattern, the more confident you are to do the pattern, and you're more confident about where you're going to put your stops if the pattern is clear enough. It also helps you to avoid chasing moves, FOMO, fear of missing out, and winging it when it comes to chart patterns. This is me, Chris Brecher. I'm the Senior Managing Director of Stocks at Simpler Trading, and have been a professional trader for 40 years, including 8 as a floor trader in the IBM pit on the CBOE. Gives me a big advantage because I've seen all types of markets, and I've seen all kinds of setups, up and down. As you saw last year, a lot of people aren't used to trading the market on the downside. And believe it or not, I think on the downside can be real lucrative, especially when some factors that have kept the bull market going overall for 40 years. Let's not say 2008 or 2000, but overall, the market's been in a secular uptrend. Things started changing, and they're still changing. So just keep that in mind. And so I've seen everything. Like I said, I have 3 reasons to do a trade, but only 1 to exit. And if the reasons I initiated the trade become absent, and I'll show you a perfect example, then I exit or tighten my stop. So let me just show you one of the best trades I did today. Now, you're going to think this is idiotic. There's no doubt you'll think it's idiotic. I was in the stocks and the options room, and a lot of software stocks have been going up. Software/service, MongoDB, ServiceNow. And here is Splunk. Splunk had not caught up with the ServiceNows of the world that are at the top of their 3-month range. So what did we do? We went and looked at the bull flag in Splunk. We bought it at 90.66. The overall market went up. And guess what? This stock stopped going up. So just to let you know that it just stopped going up. So the thing is, I'm going to show you on the left on how you combine criteria. Here's the SPY on the left. So here's the SPY on a 1-minute chart. So what happened this morning? The SPY had this next leg up. Well, Splunk was already going up. It had a bull flag, and all of a sudden it refused to go up like a lead weight around its neck. So when the market started selling off, I'm like, I'm out. So we lost 6 cents. That was the best 6 cents I lost all day. Sometimes your best trades are avoiding disaster. This is where I started. Yeah, I hate to admit it. Stock market boiler room, 1980, big recession. I was a paleontology major. Yeah, dinosaur bones. Couldn't get a job in that or anything else. So I went to work at the stock market boiler room. And everything you saw in Wolf Wall Street was true. Just keep that in mind. I moved to Chicago and then became a clerk on the Chicago Board's options exchange. Why? Because all of these suckers that were used to just buying cheap stocks, if that sounds familiar, that are buying cheap stocks, just guess what happened? Yeah, they started losing money, so they took shots in options. They all lost money in options. I'm like, who's the house? I want to go to where the house is, which was the exchange. So I moved to the Chicago, became a clerk, and was happy that the traders that were on the other side, so they're the ones that don't work for the exchange, the floor traders, they were real loud about what they were watching, and I soaked it up. I then wanted to work for a discount stockbroker. So the incentive is you got to trade your own account commission free. Back then it was like $29 a ticket, so you had to stay in things longer. Now I turned $200 my parents sent me for a trip to North Carolina and turned it into $25,000 in 2 years. I'm telling you, it was like it was yesterday. So I bought one put in Bally, BLY, at $2. I sold it about an hour later at $4. So now I had $400. I took the 200 out for the plane ticket, which my parents would have killed me if I knew I was trading with it. Had 200 to trade with, turned that into 25,000 by using chart patterns. So then I leased a seat on the CBOE, did pretty well, and bought a full CBOC seat. Tried to say that quickly 3 times. And after 8 successful years on the floor, when I saw the trend toward electronic trading, I went to work for an NYC day trading firm. I was in the top 5 out of 800 traders all 9 years the firm was there until it got bought back. Now, after that, I've been trading independently since 2003, and the strategies I'm going to share with you, they still work. They've worked for 40 years. They'll probably work for 8 million more. Do not believe that the computers know better and you don't have a chance. That's just not true. I could show you with my profit and loss that it still works. Now, how did I do 200 into 25,000? Well, when I was first on the floor, this is before I had the money, I would listen to those loudmouth traders, which were great. I still remember where I was in the pit and who they were. They'd say, I'm shorting this stock. It refuses to go up. If the overall market's weakened, the stock's going to get crushed. What did that mean to me? That meant that this was a stock that went down. The broad market pulled it up temporarily. And then when the market went down, it had that second leg down. I'm fascinated that when I was on the discount brokerage firm on their floor, I noticed other traders weren't using those chart patterns. So all I was using is what the traders on the floor were, but you can observe that they were bull or bear flags. So I just used the product strength relative to the big indexes and stocks. All these brokers tried tons of indicators and lost money. They had things called the Weebly. They had 10 different moving averages. None of them worked. How did I make money? Well, number one, I begged them to listen to me. Don't think I was like a trader snob. So I tried to get them to listen. They wouldn't. So all of a sudden I'd see a bear flag one day. They think markets are going up. They see that I'm buying puts because you had to call in the orders. So they knew exactly what I was doing. I'd like double my money. They're like, how did you know that? I'm like, well, the Cubs were playing today and they got walloped. People are bummed out. So they were shorting the market. So, and they never learned. So those were my only 2 factors in those 2 years. This is from a couple of days ago. So obviously for the webinar, we're doing promotional slides. I put this on Stock Twitch when the stock was right here and said, these are the type of patterns we're going to talk about. Yep. It went down by the previous move. It's amazing. Went down 12 points. So it was a beautiful thing to point that out before it happened. So this is how did I stay level with the big boys on the floor? Keep in mind, the people on the floor was a good old boy network. So usually any trader orders, they'd get them. So you're doing an edge against customer order flow. You're not looking at patterns. So they were just using the edge. That's why I went to the floor in the first place. But I decided that my success in doing 200 into 25,000, why not use them again? So level playing field. Yeah, see this picture? That's more like the Wolf of Wall Street firm I work with. This is like the boss getting up there and getting a standing ovation for fleecing another customer out of 30 grand. The point, though, is how did I do it? Most of the people in there, like I mentioned, are in for edges. That's what they were on the floor. I still use the chart patterns. So what happened in there is I would sit there and see, let's say IBM. I was in the IBM pit. IBM forming a bull flag. So it started breaking out. I'd take the whole crowd out of their positions. So they won their edge and I won the direction. We were all happy. I did that for 8 years, tried to teach people the bull and bear flags. And just like the discount brokerage firm, they wouldn't listen. Where am I now? I've been trading for 40 years. And like I said, I am amazed. I don't care where, whether it's Twitter, whether it's Stock Twits, whether it's on this site or other sites, these bull flags are extremely powerful. And I'm amazed how few use them. And I'm thrilled to be sharing them because if I can do it, it doesn't take 40 years to learn this. I was a novice when I started, was successful doing it. This is for novice, medium, anybody, expert. I'm just telling you, you don't have to be intimidated by the stock market. And especially if you see a pattern like I did from the hospital bed, you do something like that, it'll give you confidence. And you don't have to be a professional trader for 40 years to pick up on that pattern. This is the problem with the other traders. Now, I'm not talking about on the floor. I'm talking about right now, when you're in front of a screen. They don't have an edge. And the biggest reason they don't have an edge is they're not looking at patterns that happen over and over and over. The other thing is they use one reason to trade. Keep in mind, when I'm showing these trades, I had much more than one reason to get out of Splunk today. But if the reasons that I got in the trade all of a sudden aren't there, like Splunk acted good on the opening, markets had another leg up, Splunk acted like dirt, I took my cent loss, and let's look for the next trade. Yep, they don't choose the right stocks. So don't fall in love with Splunk. Fall in love with the pattern. That's the way I like doing it. And they use the wrong patterns. I'll show you that in a minute. They also don't combine multiple time frames. There are definitely charts that are in a 60-minute uptrend and a 1-minute downtrend. And I always go to the longer. It's probability. A bear flag on a 1 minute isn't going to work if there's a bull flag on an hourly. Over trading. That's real easy. I'll give you a perfect example today. I was betting on DAL going down because United Air was reversing. So I shorted it and then bought it back and broke even. I shorted it again and made 6 cents. I shorted it again and broke even. I shorted it again and made $1. But the point was there were a lot better opportunities than screwing around with a $38 stock that refused to move with the market. It worked, but it was stressful. Hey, look at that. Definitely. 40 years I've been doing this. You still get stressful if you don't stick to your plan. And they're ruled by their emotions. I'm just telling you, size, kinds of products you trade, they all can be ruled by your emotions. And if there's something else going on, either you trade smaller or you trade a product similar to the big product and just don't trade that much just with those edges. I mean, geez, I was in the hospital bed. I didn't go and short 10 futures. I just went and shorted something cheaper like the SPY and definitely control the risk. Now, you might say, why on earth did you do that trade? Weren't you controlling your risk? Darn right. I had to stop at the top of that little bear flag. And feel of the market. What's a feel? Today, bull flag and Splunk, and then out of nowhere, it acted poorly. That's what I mean by feel of something isn't doing what it should be doing. So you get out and you wait for the next trade. And like I said, trading news or rumors is a bad idea. And I'll go over that in a minute. They only follow indicators. I like to combine a lot of things. And I said the chart patterns are great. Don't get me wrong. I had 3 reasons to do that chart from the hospital bed. 1, it looked like a bear flag. That's one reason. That's not enough. The other is what made that bear flag start, the previous move down. It's because there was a government report and it hammered the bond market. So when this consolidated, the bond market kept going down. So that was my second reason. The thing that made it go down in the first place was still a good catalyst. The third thing was that good stocks like Apple, Amazon had that move down just like that bear flag, but instead of flagging, they just kept going straight down. That's when I knew I was right. So that's what I mean by feel. So you had 3 reasons to do that trade and it worked great. Now, these 3 reasons can change, just like you saw with Splunk. So the hospital bed had 3 reasons to get in. I just took a profit because I wasn't sure what drug they were going to give me in an hour. Plus, if my wife would have known that I was trading the day after surgery, she would have killed me. So I just took my 2.5 points and then looked like I was just watching YouTube videos on my iPad. But the reasons that I take a trade change based on different factors. It can be price action, charts, but I like to have 3 reasons. And sometimes it's only indicators. This is one of the biggest mistakes. This is a trader's nightmare. Somebody that chases a breakdown, they give up, and then after they get out, it does exactly what they thought. And that's where you combine indicators like MACDs or some kind of oscillator that tells you not to short when it's oversold. So just to let you know, that bear flag I did, yep, the MACD on a 1-minute chart got oversold. Then it went to here, but the rest of the groups I was watching never even bounced. But a lot of people short that breakdown. It starts doing that, and they're like, oh, it's acting better than the market. They get stopped out. So guess what? I'm the one they shorted too. Yeah, the original idea worked. Did I make the beginning of the move? No, I made the second. And like I said, market feel. But the market feel isn't by like rolling dice, and if it's 7, you're going to buy everything. It has to do with combining how things react to news, how things are reacting to other stocks in the group, how other patterns in other charts are working. If you see 10 other stocks that had bull flags failing before yours does, then you better get out. Costco is a perfect example today. If this doesn't look like a bull flag, I can't even fit it on a chart. That's when you know it's oversold, by the way. There's your bull flag. And then there was a little bull flag in here, sort of. So when that fell apart, I was much more confident I was screwed and Splunk. And sure enough, that's what happened. So if the patterns that got you in on other stocks that are similar aren't working, then you don't have 3 reasons to be in a trade anymore. This is an example of what I was talking about earlier by looking at a 60-minute bull flag, and a 1-minute might be a bear flag. This is the opposite. The longer term trend was down on this pattern. I'm not even showing the date. That doesn't matter. The point is the bull flag on the right on a 1-minute chart on a shorter time frame is much less likely to work if the longer term chart, even if it's a 15-minute, is going the opposite way. That's what we were talking about. You'll have more than enough chances. If it doesn't set up, don't go in. There's another thing. It drives me nuts. I have more friends and more fellow traders that think that they have to be in the stocks they've traded. I know that stock. I'm like, no, get to know a pattern. Don't get to know a stock. It changes all the time. And that's why it's vital to have a watch list that not only do you avoid looking at too much, but you hyper focus on the volatile stocks. Volatility, deployment of capital. Because if you get in something that takes a month to work and it hasn't broken out and you're just anticipating, which I just did in a stock, well, guess what? I'm tying up capital for 4 weeks when there was something else that might have worked in 1 day. In fact, the stock I did work in 1 day, and I sweated it out for 4 weeks. This is a head game. It emotionally can wear you out. I think you wait for breakouts and then a consolidation, which is a bull flag or a bear flag. And like I said, using the wrong patterns. So for the market condition, like the 15-minute chart was a downtrend on that prior chart. So that's the market condition right then. I'm not going to look for bull flags if the broad market is getting killed like it did today. You have to wait for something to change. And those are some of the indicators I use, whether it's support and resistance, whether it's certain stocks are starting to buck the trend. Definitely, I have to find the right pattern for the current market condition and the need to align your trading goals and risk tolerance. So what do I mean by risk tolerance? Because it's a really, really interesting thing that burns out a lot of traders. What I mean by that is this. This is the big contract. Yeah, that's the chart I showed earlier. This is a ledge. Now, if you put this as a SPY, it's even more clear. There's your bear flags. Did I miss this sucker? I sure did. Did I make these? I sure did. But the point in there is you got to look for those patterns. You got to look for those. And if I'm looking at something that's holding up, even though this is still plummeting, that's just not the right time. And this is the other thing, and I can't stress this enough. Let's say you're bearish on the YM. So you want to short the YM futures. This is $33,000. I mean, 33,000 product. So just keep that in mind. If you're nervous, go mess around with the SPY or even the DIA, which is the ETF for the Dow. Yeah, that worked great today. But what's the point? That this is a lot of stress, the YM. The Dow Jones, much cheaper product, same result, and it all has to do with your risk parameters, which brings me to the next thing. On the right is the YM. Sure, it worked. Why would I trade the YM after hours and not the DIA? These trade till at least 8. Some of them trade 24 hours because you can't put in stop orders on ETFs or stocks after hours. But the YM, you can all day and night. That's why what I'm showing works for futures traders, Bitcoin traders, stock traders, Forex. It works with all of them. But the thing is, don't think I'm trying to psych you out when it comes to futures. It works great for futures markets. Here's an example of charts that aren't flags. Keep in mind, the flags that I use are continuation patterns. Just like I showed you with the SPY, you're not going to make the first part. You're trying to make the second. This is slop. You don't see a darn thing. This is not consolidating a prior move. Ironically, when I was building the slide, I'm looking at this. Now that's a bear flag, and it worked. Now, this is another thing about feel. Does everybody see about support and resistance? I hope you do. Why didn't this bull flag work? Well, it was overbought, as you see on the bottom. But the other thing is it was coming up a lot against a lot of schmutz. Look at all that resistance. On the other hand, this one had no resistance overhead. This had a higher probability of success than the one bumping up against resistance. Like I said, traders who overtrade, I've been there. I'll take 10 positions. So I'll have something like 5 that look good, 5 that look bad as a hedge, and this and that. You just don't have to do that. I've done it a number of times, and it really annoys me. Does it increase the risk of wiping out my account? Not really. I'm not trading that big when I do stuff like that. I'm really spreading it out. But it's hard to manage and incredibly stressful. Like I said, I focus on 3 patterns. So it saves time in front of the screen if you look for patterns that resolve themselves pretty quickly. But don't get me wrong, it's not just 1-minute charts. It can be an hourly, it can be a daily, but it saves time if you have 3 reasons for your trade. And it helps you reduce risk by trading less. And you focus on better trades. There's an Amazon bull flag. This was a great thing. Expiration day premium on options is really cheap. We bought these options down here in Amazon. As you see, bull flag. So we got out on this one for about 100% gain in about a minute. Then it formed another bull flag. The beauty of that is by then, almost at the close, the 88 calls were 5 cents. Yep, they went to $1. Now, that was pretty impressive. So those are the fun when you're not outlaying a lot of money and you have reasons to do a trade. This is a bull flag on spot. This was posted on the chat. All of these were posted on the chats. I bought the spot calls at $1.15 because the stock was holding up and the market didn't act well, the broad market, but it didn't act horrible. It wasn't like a crash like today. And we sold them at $1.85. That's a good percentage gain in an hour. This are early morning bull flags for all you futures traders out there. There are some nice bull flags. In fact, I didn't even show the bull flags within the bull flags. I didn't even show the bear flags. So what's the moral of the story? That was clear. That was clear. That was clear. That was clear. This is slop. Yeah, you don't have to get yourself really, really stressed out by trying to trade when it's not there. Here's Amazon. Yeah, there's a bull flag. Now you might say, well, I missed this bull flag on the gap up. Well, first is that's only 60 cents. Now, what's interesting about that bull flag breakup, the stock went to 92. So that was just the beginning. There's another bull flag. These are just beautiful patterns. Are you going to miss gaps? You sure are. Are you going to make the consolidation? I hope. There's a bull flag in the dollar for all you Forex traders out there. A bull flag is a bull flag. Now, you might say, well, how about this one right here? That's what hurts when you try to do a Carly Simon trade. Yeah, anticipation. Don't do that. Find the tighter pattern and wait for the breakout. If today you tried to buy a bull flag like I did in Splunk, you get yourself hit. Even if it eventually worked, that emotional strain will wear you out. Here's a bear flag in the ES. Boy, that looks familiar, doesn't it? Yeah, you find these all the time, and that's why I'm so fired up that the Fed tightened, because you find a lot more bear flags than you used to, and they work a lot more better than they used to. Now, this is why the bear flags are working. 40-year uptrend. Ever since I started the market, when they loosened interest rates were going up in 1973 to 1980 and a little of 1980 because of the oil crisis, because of persistent inflation. Does that sound familiar? Yep. It took 10 years, really about 9 years, for this to work itself off, for the bond market or the stock market to finally get out of their funk. This only goes to 1999, but it took years. So everybody's hyper-focused that the Fed's going to stop and all that. Inflation is like a super tanker that once it goes one way, it's really hard to turn it around. So it took a long time. Just like now, I think it's going to have a lot more down moves before it's over. There's a nice bear flag in the ES. So nice tight flag, very easy to put in a stop order, very less stressful. This is the next thing. End of day SPX options. There's SPX options every day. So every day there's an expiration. So what's that mean to me? You have a volatile product, you wait for the setups, and if you miss the setups, there'll be another one. So I do not, let's say right here, you're like, I know the market's going down. Well, you don't have a lot of reasons. Then you might have a little bear flag here and a bear flag here, but you got to wait for those. As you see, this is all within 1 hour of all these bear flags. That's a beautiful thing. This bear flag, bless its heart. Yeah, that was worth 13 points in 10 minutes. Those are amazing things of these end of the day things. Anybody else notice? Yep. Bull flag, bear flag. What do you do with this? That's slop. I don't mess with that. This is a slop trade, just like Delta today. I screwed around with Caterpillar, lost 20 cents in a lot of chop, and all it did is aggravate you. That can hurt your timing. That's why if I get aggravated, I go back to exact basics. So the bull, bear, and Brecher ledges. There's a Brecher ledge. Yeah, I don't know who named it Brecher ledge, but it sounds like somebody I know. So the whole idea is this is a bear flag with a horizontal trend line. That's all it is. It's a very powerful pattern, and I look for those all the time on all kinds of time frames. This one happened to work in 2 hours and kept going and going and going. This is a massive winner. So I'm always looking for these type of patterns. There's one in Amazon. Yeah, that was a beauty. Now, what to focus on? Like I said, 3 reasons to do a trade. I want my trading plan to fit my goals and my risk. So the biggest thing is risk. And if you're uncomfortable trading a very expensive product, try to find a cheaper product that'll mirror it. Like I showed the YM futures and the DIA Dow Jones ETF. And I'm looking for the reliable chart patterns. That's the other thing. I love using simple moving averages as some kind of oscillator. There are 8 million type of oscillators. I use the MACD. I use just simple moving averages and an ATR trailing stop, which I'll go over in the future. I also have a hot stock watch list, and I use FinViz to scan for hot sectors, or I scan with Thinkorswim, or I'll do something else that's pretty interesting. I'll do this. I go into Thinkorswim. I go to the S&P 500. That's all I'm doing, the public S&P 500. This is available to everybody. And then I sort it by the most expensive stock. And then I look for what stocks are moving the most. That's about as simplistic as you get. Now, when I build a watch list, the first thing is I have a basic list, a main list. Those are stocks that historically have just been active. The Deere, the Caterpillar, Apple, Amazon, Tesla. And they also have relatively liquid option volume. If I trade a stock that doesn't have liquid option volume, like DPZ, then I have to trade stock. So it just doesn't trade enough options for me to get out when I'm wrong, and unless I do some kind of options spread that's very low risk. Now, if I see a hot group like oils, when oil futures are soaring, now keep in mind, why am I showing this? Because oil could have another leg up. The oil stocks are near their highs and oil itself isn't. So yeah, I'm going to have those on my list. I'm still going to have them. Like I said, today I had the airlines. Stocks with unusual option activity. Yeah, I used to do that all the time. Or in big news, I'll also add them, and I'll add the ones that are in the same industry or are correlating. The same thing with FinViz. You can look for stocks that seem to move together or eyeball them. I'm just telling you, it doesn't have to be complicated. The other is I'll definitely trade earnings stocks if they have bull or bear flags, like the bear flags in United Airlines today. Now, these are the charts I have on my screen. I decided to show them. I have up here some major futures up on the top. Today, a beautiful tell is this ES. Everybody was trying to pick bottoms. And I'll show you. Let's see if I can get it up here. Well, everybody's trying to pick bottoms, but I combine it with the New York Stock Exchange advanced decline. This thing would not bounce. When I saw that, I'm like, there is no way that I'm buying dips. Maybe I've already missed almost everything in the ES, so I just don't play. In the middle, I have some big FANG stocks. On the bottom, I have whatever seems like it's moving a lot. I usually have a chip stock like NVIDIA. I had the airlines today. I usually have something like Home Depot and Broadcom. Volatility. That is what matters. Now, this is only one piece of the puzzle. Another thing I have up a lot is this. Now, you don't need all fancy with this VWAP where if it crosses under it, it's red and over it, it's green. The key is I have 8 1-minute charts all the time. I have that on another screen. So I just wanted to show you that. And then this one. Futures charts on multiple time frames. I think when you look at these on multiple time frames, it becomes a heck of a lot clearer where the bear flags were. So I love having multiple time frames. These are all readily available. It's not like something like some esoteric thing. Very, very widely available. Now, this is another thing. Don't sell in the hole. So what does sell in the hole mean? It means when something's oversold, combining indicators, and the product is at support. Sure, we can look at a bear flag, but a bear flag against support is much less likely to work. Now, this is another thing, the squeeze. I don't use the squeeze just to look for stocks. I use the squeeze to look for tight consolidation patterns. So almost every bull and bear flag is a squeeze, but every squeeze isn't a bull or bear flag. Now, don't get me wrong. The squeeze without the bull and bear flags can be really powerful, but I just like using them with this. And why? Because you can do a readily available scan on Thinkorswim of all the stocks you have and look for squeezes. And then you go through them and see if any are bull or bear flags. I've shown you tonight, I think, how to combine chart patterns, indicators, and my hot stock watch list. Another one, try to say that 3 times, to only take strong trades that line up and try to skip the rest of the noise as possible. But I have a lot more I can show you, no doubt about it. Now, I'm trying to identify patterns that have a higher probability of profit by combining a lot of indicators and overall market perspective. I've definitely improved my winning percentage by showing the futures and the groups of stocks that I use, and I tried to show how I scan for them. Now, let me just show you, when I say scan, this is one of the most basic scans. All you're doing is taking a squeeze up or down on a 5-minute and then going through which ones pop out. So I'm not always looking for bear patterns. I'm looking for bull patterns as well. And I'm combining indicators, and I'm telling you, when you get those tight markets, you get those indicators lining up, it gives you a lot more confidence to do the trade. So just keep that in mind in there, and you can trade options or stocks. The other thing, and I haven't said it in here, and I think it's a huge deal. I see so many people that do simulated trades or paper trades. There's usually 100% win rate on those. Now that there's no commission, just go and trade 10 shares of the SPY. You have a tight stop, you're unemotional when it's that little, and then you can have an opportunity to build confidence. You can trade 1 share. Now I have a class, Chris Brecher's chart patterning secrets, a lot more specific than what you heard here. You have the strategy class on February 11th. Then you get some live trading. 2 hours, February 15th, 22nd. The elite gets an extra 2 hours, February 27th and March 1st. So it better be volatile. What's included in here is the chart pattern secret class, the simpler stocks mastery. That's my part of simpler trading. So I'm on 2 hours a day, 1 in the morning, 1 in the afternoon, and I jump on all the time if I see something. So what you get in the basic, $5.97. Like I said, this class is 4 hours, not the live trading, the actual class. It's like a guidebook. So just keep that in mind. I'm watching that all the time. It includes a quarter of Simpler Stocks Mastery. It's like getting the class for free. I think it's a great deal. Even if it's not a great deal, I'm telling you, this can change your trading. Can definitely turn around your trading. And it includes 3 months of watching how I do it. The Pro, same thing, except it gives you 6 months of having to deal with me, and you get the class, 2 days of Pro live trading. Now, you might say, what's the difference between your Simpler Stocks Mastery when you trade or the live trading? Because I'll try to show all shapes and sizes of trades in the simpler stocks. On the other hand, in the live trading, I'm looking for specific patterns. So it's just a more specific way of trading. And the elite on the right is you'll have to deal with me for a year. And you basically get the patterns class for free. So just keep in mind, this is a great guide in here, and it's a great thing to refer to. Now, there's a member discount on all packages. If you're a member on some other of Simpler Trading's great sites, you can get a savings, $100 on the basic, 170 on the pro, and you say 300 on the elite, and that's if you have a membership to one of the other groups. 4 hours. Yeah, and let me just tell you, it's going to be packed with information. So 4 hours goes by real fast if it's something you can use to make a living at this. I use my 40 years experience and those 3 chart patterns and show you indicators, show you feel, show you companion stocks, show you correlated stocks. They're different. There's a number of things. Do you trade options? Do you trade stocks? Do you trade futures? And I'll show you on how I do those. For 4 hours, I'll go over it. This puts me in your corner. Keep in mind that when I'm on an hour in the morning, an hour in the afternoon, I'm not leaving to go play golf or get on Amazon all day, not the stock, on Amazon, the site. I'm trading all day. If I see something that comes up, I'm jumping right on to help out. A lot of times Fed comes out, FOMC at 2 p.m. On a Wednesdays, I jump on beforehand to guide you through that. So I'm definitely showing you this on how I want you to look at it through my eyes. Like I said, live trading every day, hour in the morning, hour in the afternoon, 3 videos after hours every week. I also have real-time trade alerts. Luckily, the Delta that was buy, sell, I'm not going to spam your phone. I'm going to try to come up with the best ideas, and I'm going to put those in there. But darn right, I put the ideas of the ones I lose. So just keep that in mind. I'm not perfect, but I'll show you the ones I buy, the stops, and so on. And I'm always going over questions and answers. The more I can help everybody, the better. The other thing is the basics of stocks, options, and spreads. We have in-depth videos you can refer to. Oh, there's the 2 hours of live trading on February 15th and 22nd, 2 hours each one. And then the elite, you get an extra 2 hours twice. Now, if it's intimidating to pay too much up front, just go and click on PayPal credit. So you can apply. There's a special deal with Simpler, and you can get 0% interest for 6 months. So here it is again, Basic, Pro, Elite. Really exciting to be sharing this. And like I said, I use this as a reference manual. I still take notes. I still show my mistakes. I still try to go through exact patterns I use. I love to refer to them. So at the beginning of the year, why am I teaching this class? This class, like I said, is for everyone. Futures, Forex, stocks, penny stocks, Caterpillar, AutoZone, no matter what, it can work. Now, why am I teaching it now? Well, it's the beginning of the year, but a lot of people are discouraged about last year of trying to buy dips and they never bounced. When these bear flags, when the Fed finally is tightening mode, that's why I'm teaching the class now. And do I need any indicators? Any indicators that can help you get through the end game is great. And like I said, all time frames. Size account, any you want. So I know they're day trading restrictions, and you want to find the tightest patterns, and it works for any size trading account. Now, why this one? I wasn't sure I had the slide in here, but almost every YouTube video I see on this kind of thing doesn't apply field, doesn't apply indicators. And I'll tell you, they never show a losing trade. A lot of times you can learn a ton from a losing trade, and it gives you credibility. But they don't show enough to get you to the end game, and that's where I come in. These patterns with indicators show much better entry and exit points, like you saw the one from the hospital. That is as clear as day, and that's a lot better than any other class I've seen. And I try to show easily identifiable patterns. And if I wasn't in the hospital, I would have posted that trade in the stocks room. On the other hand, there were some other trades that I did send to simpler to post on the option side. Those were closing, though. I'm not going to do opening trades when I just got off anesthesia. And I'm going to show you why some good looking patterns don't work. And I'll show you like the Splunk today. And I'm trading full time. I'm using these criteria, and I'm constantly excited about sharing them and answering the questions. And don't forget, it's not just one indicator. I'm always looking at different indicators. So I look at the Fibonacci's more. Now the Fibonacci Queen, who's a friend of mine, got pissed because I wouldn't look at it. I use VWAP now. Now, why? Because a lot of subscribers started using it. It's a give and take. If a subscriber has a great thing, I'll go and back test it. So it becomes a community of sharing ideas both ways. And I've learned a lot from my subscribers. So like I said, member discount on all packages. And these, I just can't stress enough. Having all of this included with the class and having all these simpler stocks mastery twice a day is amazing. So what I've seen in here is I've gone on for a long time and I've showed you a lot of ideas, but I'm sure you have a lot of good questions. So I think it's question and answer time. So let's go through those and let's find some good questions that are out there. Yes, they work for Forex. I'm glad that I don't know if you were on when I first said it, but definitely a bull flag or a bear flag is a bull flag or a bear flag. And the beauty of the Forex is you can put in stop orders. Now, a bear flag will definitely be shown in the class, but the bear flags are consolidation patterns after a prior down move. So it's a prior down move with a consolidation area. A lot of times those result in the exact mirror of the up move. It's not perfect, and that's why you have combine it with indicators and have meat. So the way I find these patterns, there's a number of ways. Like I said, you can find them from the squeezes, and don't laugh, there's another way to find them. This is my main list, and that's a great question. And I'm changing this all the time, but I want to show you what I'm talking about in here. All right. This is my main list right down here. So we talked about on different time frames. So, yep, I'll take a daily, hourly, 15-minute, 5-minute, or if I'm trading smaller stocks, I might be setting up longer term, like the end of the year, that whole Santa Claus rally, tax loss selling stuff. The JC did great this year at the end of the year. That's when you look at a weekly, daily, and 4-hour. But I'll look for patterns on all my main list. Not all the time, but here you go. And I just press the button and you look for them. Also, I'm sitting there helping all day. And you can hear the little keyboard going. But I'll definitely be doing that in between certain setups. Now, you might say, well, what setups? Usually when the market's real busy, I'll trade the most expensive stocks. I won't be looking at my stocks that are $10 stocks. I'll be looking at the service nows and so on. And what time frame? It depends on how I'm trading. I'm not trying to be glib about that. But like from the hospital bed, my time frame was real short before my wife came in. So it was a 1-minute pattern. But it definitely should be in the direction of one time frame farther out. So if the longer term time frame is down, then I'm looking for a shorter term bear flag. The MACD and the ATR trailing stops, definitely I use those all the time. Now, you might say, well, what do you use them for? Well, I showed you the bull and bear flag, and you could see obviously where you stop yourself. If you short the bear flag from that hospital trade, you're going to be buying back if it gets back above that bear flag. On the other hand, as it's going down, you can add indicators that will, like, it's more mechanized about if it crosses, let's say, a moving average, it gets you stopped out. That way, sometimes you can actually stay in longer. So just keep that in mind. Now, just to let you know, I have this still up here, Basic Pro Elite. And keep in mind, this is like a great reference. It's 4 hours that you have at your command to go back and refer to. And if you have that and the Simpler Stocks Mastery, anything that doesn't quite gel in that class, just ask me in the room. I know I've been doing it for 40 years and most people are jaded by now and get annoyed with questions. I love questions. If I can help, great. I want to just transfer my excitement of trading every day and try to make this successful with you. Yeah, like I mentioned before, the 0 DTE. Yeah, definitely works. But I look for really tight patterns because I get too aggravated if I'm not looking at the tightest patterns. So definitely 0 DTE. So, in fact, just for laughs, there you go. So there's an answer to your question. Is this slop? Sure, it's slop. Is this some kind of top or some kind of bearish flag? Is that a bearish flag? Yeah. So you might say, well, I missed all this. That's 7 points. And 7 points with 12 minutes to go could be a lot of money. So yes, it really definitely works with the SPX, but the SPX will really humble you. You either get out too late, get out too early, but if you have tight patterns, at least you have a measuring objective. So thank you for being on the webinar today. I think it was great to have you all here, and I look forward to having you in the class. Everyone take care and have a great evening.